Markets are unpredictable, volatile, complex, but your trading journey doesn't have to be. Hola Prime TV is now live. Every trading day, join top coaches as they break down real-time setups, key levels, live trades across Forex, futures, and crypto. From Tokyo's early momentum, to London's open surge, to New York's high volatility action. We decode every move live. Get sharp analysis, clear strategies, and insights that actually make sense. And yeah, we don't just break down charts. We crack a few smiles too. Only on Hola Prime TV. This is more than content. This is infotainment and beyond.
Hello.
What's going on, Coach Alex? How you doing?
I'm good, thanks, mate. How are you?
Oh, wonderful, wonderful. Happy Monday. Happy Sunday evening here in the U.S. Happy Monday morning over in Asia. And to you in Australia, Alex, how was the weekend, brother?
Yeah, it was good. We had a public holiday, so I don't know if you've heard of this before. Maybe you have, but we play a game called AFL, or Australian Football League, I think it is. And we had our big grand final, so our Super Bowl was on the weekend. So we had a public holiday. It was a long weekend. Everyone was out and about doing things. The grand final was held in my city, so it was
Nice.
it was a pretty big weekend. A lot of celebrations, a few pickle shots, Tiger, that's for sure.
Yeah.
So yeah, good weekend. What about you?
Hey. Yeah, it was a good weekend here as well. Went to a friend of mine. Her son plays baseball, so went and watched a baseball tournament yesterday on Saturday, and it made me just want to get out there and smack it. I grew up playing baseball myself, and yeah, after graduating high school, kind of got into softball leagues and all that. So yeah, it just took me back to when I was a kid. Ready to get out there and smack a ball around. They have 200 and I think it was 240-foot fences. So I was like, dang, I could smack it over that with one hand. Yeah, it was a good time. And then just kind of relaxed at the pool for a little bit last night for a little while. Had a friend over and then went met some other friends. Ended up going out on the town and stayed away from the pickle shots this time. Yeah, just a few beers and that was it. So just nice. Spent the morning watching football. Yeah, football here on the TV. So. Yep.
Nice.
My team is the Chiefs, Kansas City Chiefs. Yeah. So yeah, they're in the middle of a tangle right now with the Baltimore Ravens. They're another really, really good team. So who knows what will happen by the time I get off of this stream. I think they're pretty close to – I think the Chiefs are up right now. But, yeah, I ain't sleeping on Baltimore because they're a really good team. So, yeah, good day, good weekend. Ready to get this trading week started. So,
absolutely.
So, yeah, I was just kind of looking at the news coming up this week. Back end, if you don't mind, just flip it on over to my chart, and I'll pull up the news and what we're looking at this week. and see what we've got. So the big event, I think, is going to be obviously our non-farm payroll, which is going to be coming up here on Friday. So that's always a big deal. Hold on, there we go. Trying to maximize my screen a little bit here so I can zoom in a little bigger. But yeah, obviously nothing today. Monday, for everybody on Monday, you guys have Australia's rate statement coming out. Looks like they're projected to keep it the 3.6% with the rate statement to follow there. So that'll be the big event on Monday. That's really about it. Yeah, you got some China data coming out for the PMI, which I know kind of affects Australia as well. I'm sorry, let me maximize my screen. There we go. Sorry about that. But yeah, cash rate statement and then press conference to follow. Tuesday, we got the JOLTS job openings here in the States on Tuesday, 10 a.m. Eastern Standard Time, New York City time. And then Wednesday, we got the ADP non-farm employment change Wednesday morning. And then we got a couple hours later, we got the PMI data coming out for the manufacturing sector. And then Thursday, Swiss franc, they're going to have their consumer price index come out, their inflation, see what they've got coming out. Looks like they're projected at the moment to be 0.1% less than the last period. And our normal weekly job unemployment claims here in the States looks like they are projecting a little bit of a tick up, about 11,000 higher than the previous week. Bank of Japan Governor Ueda will be flapping his lips about 9 o'clock at night Eastern Standard Time. And then Friday is going to be all about the non-farm employment. I mean, that's always a big deal. High or low, it's always a very volatile day. So everybody's going to definitely want to be careful on Friday. Being careful, not trying to trade around 8:30 New York time. These times that you see here is Central Time, since I'm here in Kansas City. So just add an hour to it, and that'll be your New York City time, your Eastern Standard Time. And then our normal weekly unemployment rate as well. So unemployment rate looks like they're projecting to keep that the same, 4.3%. Bank of England Governor Bailey is going to speak at 9:20, and then we'll have the services sector for the PMI data for the U.S. come out at 10 a.m. Eastern Standard Time, New York City time. So yeah, it's going to be can't wait to see what that data comes out on Friday. I mean, here in the States, we've actually had 2 solid weeks of data. We've had 2 weeks where pretty much everything has come out pretty positive, which has been a welcome sign. Actually, I'm just going to pull this economic map over here real quick, and we'll just take a quick look. But yeah, I mean, everybody's been calling for the death of the dollar for a while, but and obviously it's very, very dynamic, right? But this data changes pretty frequently. But yeah, just looking at the three dates you see there in yellow, that, as always, anytime you see a date that's in yellow, that's within the last 7 calendar days. So you take a look at our GDP data we had come out just a few days ago, bullish data there. Forecasted 3.3%, actual was 3.8%, which was also up from the previous report, minus 0.5. So really strong GDP. I mean, our growth data has been looking pretty good over here in the U.S. And then the PCE data, which of course is the Fed's favorite gauge for inflation, that came out on forecast, 2.9%. And then also we had the jobless claims data come out, which was bullish. So 218,000 to the 235,000 forecast. So yeah, it's been a good couple weeks here in the U.S. It really has. When you look at the economic surprise meter, the U.S. dollar is sitting at 44%, which means 44% of all this data you see has been exceeding expectations. So not great, but not bad either. Now, 2 weeks ago, it was pretty bad. The dollar was all the way down, I think, at 22% or something like that. So they were just missing everything. Economists were missing quite badly. But But yeah, it's been a good couple weeks here in the States. The dollar's looking a little bit better. Still not great, but surprisingly, Alex, the U.S. dollar has actually been outperforming the other 7 major currencies. If we just kind of take, if we just kind of take a look, I'll just copy and paste this one as well. The economic surprise meter. Here we go. And then you can see here that, the dollar, again, 44%. And it's actually surprisingly leading all the majors, because you can see the percentages here. I mean, we've just been in a recent time period of economic underperformance. Just looking at all the currencies, all the economist predictions, they've just been light. They've been low. So you're sitting there at a 33% global average. So that's pretty low. Like the fiat currencies, they're just not doing very good as a whole. Let's just call it what it is. And so, I mean, as a result, that's just adding to the narrative of the gold and silver, right? Gold and silver is still doing pretty well. And then just kind of taking a look at the top setups that I'm keeping an eye on. And as always, ladies and gentlemen, this is more for, a multi-day trade, right? Think of this as like a short-term swing trade, mid-term swing trade. So, if I'm trying to get into a trade for a handful of days, this is the number one thing that I look at. Hey, where's the fundamental analysis at? Where's the technical analysis at? Looking at seasonality and trend. And then where's the sentiment analysis at? Meaning what are the big banks buying and selling? And then related to the retail sentiment, right? It's kind of a contrarian signal. If everybody's short the USD Canada dollar pair as an example, well, that's a good contrarian signal to buy. So, but again, it's only one piece of the puzzle. The COT is only one piece of the puzzle. I want to see where all the other data is at relative to it. So, I mean, sitting right now, dollar Canada dollar, number one bullish pair, score of a 14. 5 or higher is bullish, 9 or higher is very bullish. Dollar CAD is clearly in the lead. So any chance I get this week, whether it's a shorter term swing trade or even a 5 or a 15-minute demand zone buy, that's going to be number one on my list. So, and then followed by the pound New Zealand, and then the dollar CAD. We got some dollar pairs coming back onto the list. The dollar pairs for me, Alex, they've been they've been more neutral. They've been pretty neutral over the last few weeks, but over the last week, since we've had some good data come in for the dollar. I mean, I've got the dollar yen, got the dollar Swiss, got some oil on there as well for a bullish call. And then the Dow Jones is picked up. Speaking of dollar Swiss, it's fantastic at me. So, speaking of dollar Swiss, it just screamed at me with an alert. So let's see where we're at on dollar Swiss. Okay. So dollar Swiss, I've got this little demand area down here, a few different time frames. That's why you see all the different shades of green, because I've got a hour demand zone. I got a 4-hour demand. Go to some smaller time frames, 15. Got some more demand. So, might possibly be interested in jumping into a Swiss franc trade here in a bit. Oh,
nice.
Looks like U.S. oil screaming at me too. Look at that. Had a little bit of a gap down in oil, gapping down right into a demand. So, hell, we might have a couple trades here today on a Sunday. Why the hell not? I'll get back to those. I just need it to do a little bit of work down here before I decide to jump in. But I'll just go back to. And sorry, my voice is a little scratchy today. I apologize if I sound horrible. Get a drink of water.
That's all right. Easy.
And then flipping over to the bearish side, Euro dollar, Aussie dollar, New Zealand dollar. Those are all looking pretty bearish right now. So pretty much most of the dollar pairs I'm going to be paying a lot of attention to this week. Gold and silver, they're not on my list at the moment, but I think they're scores of like +4, +5. I always just filter out the neutral ones since I don't typically pay that much attention to them. I just more so pay attention to the bullish and the bearish. But yeah, I'll still look at those for like 5-minute, 15-minute, supply and demand zone trades. Get my voice back here. So yeah, that's the top setups. I'm going to take a look at those alerts here in just a minute, but the only other main thing I wanted to look at was the COT report, see what the banks did last week. And as always, ladies and gentlemen in the chat, this report comes out every single Friday, unless there's a holiday, and then there's usually a 24-hour delay on it. But yeah, just looking at the COT report. Here, let me do this. COT report. So, Alex, all 4 of the U.S. indices, the banks increased their longs on this week. So you got the Dow, look at that, number 1 at 20%. 20% net on the Dow. Yeah, that's pretty substantial. And then you got the S&P at 3%. Yeah, it is. And then you got the S&P at 3%. You got the NASDAQ at 2%. And the Russell at 2% as well. So, yeah, they bought. Enough said, right? I mean, it was up. And then if you look at gold, they actually increased their short. Or, well, I should say they closed out, or they added shorts. I'm sorry. So they added some longs, but they added more. They added shorts too. And when all the math comes out, since they're so long, net long, yeah, it actually was a decrease of 0.97%. So the banks had themselves a risk-on week last week. It looks to me like.
Yep. Yeah. Wow. I can't believe a 20% change in the Dow. That's incredible.
Insane.
And the contrast of the gold, as you were saying, over the last couple of weeks, USD pairs being all the way at the bottom, essentially, gold being quite high up to the top along with silver. And now we've almost just done a flip. I know silver's, bottom middle, but gold, completely different area to where it was last week when we were doing this on the Monday prior. So, yeah, I guess I'll have to be paying attention to that, seeing what's going to be happening in this coming week with such a turnaround. Will gold be trending as much as it has? Will it slow down? Will it range, or will it just continue? Those are the questions that I'll want to be answered looking at this data.
Yeah, that's it. I mean, I'm definitely going to be looking at the indices myself this week, the CFDs, see if I can't find some positions. So, but yeah, as far as the top setups go, like I said, I believe, what was it, the NASDAQ? Yeah, NASDAQ +5, Dow Jones +5. So yeah, that's going to be on my list. I mean, as always, ladies and gentlemen in the chat, as always, you got to keep in mind this COT data. It's always a lagging indicator, right? So the report comes out on Friday, usually about 5:00 Eastern Standard Time, New York City time, and it's current as of the previous Tuesday. So every time this comes out, it's automatically 3 days old. So just keep that in mind. It's the Tuesday to the prior Tuesday. So 3 to 10 days old, if that makes sense. That's kind of the way I look at it. So it is a lagging indicator, but it's just the best we've got. And with big banks, institutions, I mean, they're typically doing a lot of position trading. So, if they're getting in this, that doesn't mean that the data is automatically bad, 3 days later, 4 days later, because they're typically doing the longer term trades. So, but it's just one gauge. It's just one piece of information I personally love to look at. I mean, we can't beat the banks. The only thing we can do is join them on these higher time frame trades. So it's just one of my favorite indicators. But yeah, where was the dollar? So the dollar 3.5% increase. Bitcoin looks like they break even. So they didn't really do a whole lot. They got rid of some longs, but they also got rid of about the same amount of shorts. So they're still just barely on the net long side, like barely, like by 0.09% long. So not really a big play in my mind on Bitcoin as far as a higher time frame. But as always, 5-minute, 10-minute, 15-minute for me, supply and demand zone. Obviously for you, Alex, doing the ones and the fives, not going to make that much of a difference, because at the end of the day, we're just doing price action trading. But this is just, again, more so for the short term swing trade. That's really why I like to look at this. But I will say, I still pay attention to this, and obviously the top setups, even if I'm still just doing a small time frame trade, because I still want to try to be on the right side of the market. If the banks are net long, if my top setups is giving me a bullish signal, well, the last thing I really want to do is go and try to short it. For me personally, even on a 5-minute time frame. I'll tell you what. Well, there's Bitcoin. It seems like all my alerts are hitting right up front. So I guess we better go take a couple of these, huh? All right. So Bitcoin. All right. Let's see here.
Busy
in the middle
afternoon for you, Tiger.
I know. That's 3 alerts in 7 minutes since we've been on. Let's see what we got here. Bitcoin, I was kind of looking at this supply zone as a possible short, just literally for like a short-term trade. Nothing too long. So we start out, we had okay, so there's a 4-hour supply zone. And then we go down to a 1 hour. Actually, I think I went down to a 15. Is that a 15? Yeah. So 15-minute supply zone. Gigantic drop. That's a strong momentum move. I love these strong momentum moves. So what has happened, we've came up and we've tested it. Actually, have we touched it yet? Let me go look. Let me go zoom in so I can see. Not quite touched it, but pretty close. I always set my alerts a few pips out just so I can have a little bit of heads up, go and do my analysis at that point. So Bitcoin is pretty well in neutral territory from a higher time frame perspective, but just looking at this thing on a smaller time frame, we got a downtrend, pretty nice downtrend. We've come up into the higher time frame zone. We've got some confluence on the 15-minute time frame. So, yeah, basically when it comes to this potential trade, I just want to see a little bit of a bearish engulfing type candle. I mean, nothing too crazy, right? The technical analysis doesn't have to be any harder than that, right? Just price has entered my zone, and I believe that white line, I put that on the proximal line of the 5-minute supply zone. So yeah, I would love to see it just come a little bit deeper, tag that 5-minute line right there. And then, yeah, I'll just keep an eye on this thing on a smaller time frame and see if I can get some type of a bearish engulfing candle. So there's that. Keep an eye on that. What else did we have? All eyes on tech and AI, which leads today's strength. This is our poll question. Big tech, AI innovation, commodities, or U.S. dollar strength? So that is our poll question. Let us know. Akine, what's going on, boss? How do you get access to the data charts on screen? Are you referring to my like top setups and all that? Give me some more information. Like what exactly are you asking there? And by the way, you did really well on that coaches challenge on Friday. You and oh my gosh, the other guy's name is slipping my mind. Yeah,
yes, that was fantastic.
You guys, what was his name? The other guy?
No, it slipped my mind as well.
Yeah, but that was a lot of fun to watch, and you guys killed it. And it was only because Sam cheated in the last minute and threw on 15 contracts to come back and win. So you clearly got that in my book, Akine. And gosh dang it, what's the other guy's name? It's slipping my mind, but anyway, yeah, no, that was a lot of fun to watch. That was during my sleep time, so the first thing I did when I woke up on Friday was hit the replay button on that. So that was quite fun. We'll have to do that in Forex. It'll be cool. We'll do something like that.
Absolutely.
At some point. Yeah,
100%. Definitely.
You and I can do like a 5-minute time frame or something like that. Just see how quick. See what we can do in an hour or 4 hours or whatever the case is. Yeah, that was pretty fun. That was pretty fun
It
to
is.
watch.
We'll have to give Michael a crash course in scalping and see if we can't get him involved as well. See if he can get
Yeah.
something out of it. That'd be funny.
I mean, I feel like the way he trades, I feel like you could do it at the smaller time frames. I mean, I feel like, with his algorithm, I'm sure you could probably do it with the smaller time frames too. I don't see why not. I don't know. We'll have to ask him about that. But
Yeah,
yeah, I mean, I
absolutely.
know I could supply and demand. I mean, I know what I do translates to the smaller time frames. I'm working on getting better at it, Alex, because I have been historically a higher time frame trader, 4 hour time frames, 1 hour time frames. So yeah, but ever since joining Hola, I've been going down the smaller time frames just so I can provide more trade examples for the chat and everything. But it's been actually quite fun. Hey, I'm gonna shut my blinds. I'll be right back. The sun's
Yeah,
coming in.
all good. No worries. That's absolutely fine. Great. Well, while that's going on, chat, I'm excited in terms of looking at that. I believe it was a USD CAD that was bullish a number of 14. That seems astronomically high. So I
Yeah.
think I'll be looking fully bullish. I mean, obviously, I haven't been trading that long with you, but I'm assuming that's on the upper tier of how high you can go on that chart for being bullish, surely.
Yeah. I mean, I think 15 is the highest I've seen anything because gold was up at about 15 here a few weeks ago.
Hmm.
But yeah, I mean, with dollar CAD, there it is right there. I mean, there's a 1 hour time frame. I've got a 1 hour demand zone down here that I'm keeping an eye on. So just give me a simple pullback. I mean, ideally, would love to see a little bit of manipulation in this area before it ultimately hits, just to kind of create that liquidity. Add stop losses down here from a point like this, lower lows, just to add a little bit more liquidity, a little more, a few more stop losses. Well, if you're buying, obviously the opposite is a sell order. So if we can get some more sell orders added down here so that the banks can take those sell orders to fuel their buy orders and then ultimately drop it in the demand zone for whatever unfilled orders would be in the zone, then yeah, that's going to be that's probably setup number one for me this week. Because that's a super strong momentum move out of that zone. I like that. And then yeah, if my wish list is just give me a little bit of manipulation in this area, get those stops on either side, and then drop it in for a buy to the long side. So yeah, just because of the such a high score, that's setup number one right there.
Yeah, absolutely. So I know Michael says that he wants what is it? He wants bodies, not legs. I think in
Right.
relation to wicks. What do you find in terms of going into these supply and demand zones? Because sometimes I don't mind the wick if it comes in and it reacts like I've talked about before. Like touching the hot plate kind of deal, and you pull your hand away. Is that
Yeah.
something that you like to see? And you go, oh, that's such a strong reaction. It came in, it
Oh, for
rejected
sure.
off it. Maybe you're looking for an impulsive move, or are you not looking for wicks at all? You just go, nah, wicks aren't.
If it's no, that's a great question. If it's an institutional zone, meaning you got all the chop in the middle, like I said,
Yeah.
right here, just as an example, this, if we get that sideways movement for a short term, then that represents fair value because buyers and sellers are temporarily agreeing on the price point. And then obviously, the buyers and the sellers, you got liquidity on either side. At some point, it's going to come out of that zone. So for this example right here, for me, this would be a limit order. Just simply drop in, just limit order. But
Yeah.
if it's a situation where it's not necessarily, maybe that zone's not exactly where I'd like to see it, meaning maybe it's a little bit in the center, diddling in the middle. If it's like in the middle somewhere, then I have got to get some verification. So, and this is also the same if I miss a trade. So let's say I'm asleep and it hits my zone. Okay, I wake up and it's wicked in and then closed above it. Well, then I'll look for a second chance entry. So I'll just drop down to a smaller time frame. And in the process of it coming out, let's just say we came out to this area here, right? Well, then I'll just drop it down to a 5-minute or 10-minute or 15 and see if there was a brand new demand zone that formed towards the lower end of that leg. If so, if I get a retracement to it, then that's another good opportunity to get in. So, but yeah, wicks are great. I mean, nothing beats a wick to me.
Yes.
As far as this type of trading. Now that's going to be obviously different from the way Michael trades, but yeah, he does all the EMAs and it's a very strong signal. But I personally, with supply and demand, I rely on the zones themselves. I don't really get into all the EMAs because the theory there is, anytime you have a strong move away from price, just like this, right? You get this strong push away. Well, there's buyers that missed out on this. So that's one thing.
Yeah.
So the buyers missed out. So they're up here thinking, dang it, I missed that price. If price comes back, I'm buying because they saw this strong push away. That's number one. But also banks and institutions. Perhaps they didn't get to fill all their order because obviously the banks and institutions, they're trading hundreds of thousands of dollars, millions of dollars, on their orders. So it takes them, they can't just put in their full position, ladies and gentlemen in the chat. They're not like you and I and Alex, okay? They can't just place their order. They have to layer their order in so that they don't spook price and it fly up without filling their order. So, that's where they're kind of averaging in, buy a little, buy a little, buy a little, buy a little, to kind of hide behind not to give away their not to tip their hand is what I'm trying to say. So yeah, they're gonna layer in, and then when they finally filled their order, well, they'll finish their order and they can push price. The banks can push price anywhere they want on any asset. The institutions, right? The trading firms, big trading firms. So, but let's just say they didn't get their order filled. Maybe they only got half their order in or a quarter of their order in, right? Price moved away. Well, they still want to fill their order at that price. So they're going to be doing the same thing as a supply and demand trader. They're going to wait till they can push price down so that they can get into that zone and fulfill the rest of their order so that they can push price up. So, yeah, I mean, it's mainly banks, but obviously there's supply and demand zone traders out there too, big whales, as you would call them, that are doing the same thing. So, yeah, that's ultimately all I care about. If I didn't have a single indicator, oscillator, moving average, VWAP, if I didn't have any of that, that's fine. I would be able to survive with just the zones. But of course, I love to have my volume spread analysis candles just so I can see how much activity is happening there. Make sure that those candles are expanded range candles relative to the recent candles, like over here. Right? That shows that there's some people doing some work in these areas. This candle, this candle, this candle as an example, right? You and I, Coach Alex, Akene in the chat, anybody else, we don't have the power to do this, right?
Yes.
These orders, those red candles, the yellow candles, right? That's institutional activity. So if the banks are making those, if the banks are doing all that work, it must be important, right? So that's why when I look for a demand zone or a supply zone, I want to see a big candle. I don't want to see this demand zone with like this blue candle over here or some of these short green candles. I want to see it with some actual gusto because that tells me it's pretty significant. That typically means, it clearly means that there's big players involved in creating that zone, creating that push away, that leg out. So, but yeah, like just to finish off your thought there, your question on the wicks. Yeah, wicks are incredible. Wicks are great. That just shows strong rejection. But yeah, if I miss out on that trade and I got a big candle with a wick underneath it, absolutely, I'll go down to a smaller time frame, see if I can't find a smaller zone to pop into. Now, I don't want to buy it. Like if I have a big candle wick down and then close up in this area. Well, I don't want to just buy right there. Right. I want, because then that's going to mess up my risk reward ratio. I still want to get my discount. So I'm still going to wait for price to come back to that zone, or perhaps, wherever the demand zone would be, as a second chance to buy in. And that's exactly what I did a couple times last week, actually, because I had a couple, I can't remember which asset I was trading, but yeah, missed the initial order. So I just waited for the retracement, find that zone. Pretty strong. It's pretty powerful. Let me go see, because I did have a couple. Okay, so I'm going to ignore that supply zone since it already flipped through on Bitcoin. Yep. So at this point, I'm going to delete that. Yeah, I just never got a bearish engulfing candle. So I stayed safe. There we go. So I can ignore that. And then I had a couple others over here. Did you have anything you were looking at the moment, Alex?
Not at this current point. I can always review some trades, but I'm just interested, and I've just got questions. Looking for what you're going into right now.
Mm-hmm. Yeah, so let's looky here, because U.S. oil is given a bullish score of a 7. So here we go. So we're in a zone. We've got a nice wick. Here's your wick you were talking about. I'm going to delete that box since it clearly touched the bottom. Nice. All right. Well, we may have a trade here. I just got to wait for it to break that candle, that wick candle. Let's see here. Oil. Okay, we had a 15-minute. Perfect. Oh, this is beautiful. All right, so let's see. So there's my 15-minute demand, and we're clearly getting our bounce. Oops, 1 hour. Yeah, and then I would also just look at the 1 hour as kind of a confluence. So we're at the bottom. Yeah, we might have a good trade set up here. So I'm going to go back down to my 5. Let's see here. Let's go to the 15. Did I get my gap up? Okay, so I did have a little bit of a fair value gap, acceleration gap, however you want to call it. Right? So there's a little bit of a gap, and then we got our demand zone. So for this, I'll probably obviously put my stop loss just below this point here, just to give it a little more wiggle room. And then I'll even drop it just a little bit below. So the easy target is the top of this range. So let's go ahead and put this in. Stop loss, take profit. Get that out of the way since I know we're playing off this. Now I'll probably wait to buy it after it kind of breaks above the green candle itself. So it's currently kind of in the middle, but let's see. Let's do 64.40 for a stop loss. And I'll probably adjust this, but I'm just going to throw in 66.17 for the moment for a take profit. We'll throw a 50 spot on it. And then I'm just going to go to a 1 minute time frame here. Probably just wait and see if we can get a little more volume, because we had that initial drop, which was nice, but I just want to see. Let's see here. I may just buy once we get up here. Like, I just want it to prove itself. So obviously the market, just opened. So we got the initial drop. This is what you call if I'm looking at this on the higher time frame, which is, kind of where the trade idea developed. 4 hours. Okay. We got obviously an uptrend ever since, well, a 6-day uptrend, right? Big, gigantic 4-hour candle right there, 4-hour demand zone. And then I already showed the 1 hour, and then I already showed the 15. So we got some pretty good confluence here. Price came down. Let's see here. Let me go back to my 1 hour just for a second. So sharp move up. The move down was pretty strong, but it wasn't as strong as the up move. Okay. So 1, 2, 3 candles on a 1 hour. So that's 3 hour up move. But for the same move, it took 7 hours to come down. So it's a slower momentum, which is what I like to see. I love to see the initial leg out from the zone where price consolidated. I love to see that strong move. And then I want my leg back into the zone to be less momentum, because that shows me that the buyers are kind of fighting it harder than the sellers were fighting it in the leg out, if that makes sense. So yeah, I'm just going to go down here to 1 minute and keep an eye on this. So yeah, as soon as we get to that white line, I'm probably going to do a buy order. I mean, I could put a buy stop in, but I just prefer to watch it and just do it manually, just so I can pay attention to volume, all that kind of stuff. So yeah, that's pretty much what I'm going to be doing for now. So Alex, if you had anything you'd like to share, man, go on.
Well, actually, there's a really, really good question in the chat for you, Tiger. Would there be any scenario whereby even price retraces to your demand zone, that entry is invalidated? So what invalidates it if it is in the demand zone is what I'm getting at there. Is there anything?
Yeah. So let's just say, okay. So like I say here, so momentum. Akene, momentum is one of the main things. So in this example, we had 1, 2, 3 1 hour candles. So that's 3 hours up. Okay. 3 hours to make this move up. Let's just say the move down only took 2 candles. It just came straight down, right? If it comes down faster than the move up, then that to me invalidates it. That's one thing. Because you don't want to get in front of a moving freight train, right? Number one.
Absolutely not.
So momentum is one thing. Another thing is, I want to go down here and see some type of bullish engulfing candle, or a candle with a wick underneath. If I don't see that and it just wicks on through, then obviously it keeps me safe. Obviously the fundamentals, like if I'm looking at a higher time frame, I want to make sure the fundamentals are in my favor. If this particular asset's giving me a bearish signal, I personally just don't want to get into it on a higher time frame. I'll play around with it on a smaller time frame, 5 minutes, 10 minutes, 15 minutes supply demand zones. But as far as a higher time frame, I don't want any part of it. I want to only trade in the direction of, number one, the trend, right? We got to stay with the trend. The trend is your friend until the bend at the end. But I like to also add in the fundamental analysis as well. Hey, where's all the recent GDP, inflation, jobs, interest rates, and all that reports going? I don't worry about it as much though on the smaller time frames, because we all know how much noise there is on the smaller time frames.
Yeah.
But the banks are typically trading on the higher time frames. The 4 hour, 1 hour, weekly, monthly. So I definitely don't want to go against the grain on the higher time frames. And those are trades where I'm trying to get 150 pips, 200 pips, right? 250 pips. It's just less noise. When you're trading with the banks, when we stop fighting the banks and we just join them, if you can't beat them, join them. Things get a lot simpler. I don't want to say easier, because nothing about trading is easy. It gets simpler to play the predictable game in trading. So, but yeah, I think that's it. Momentum. Yeah, momentum. And then again, I want to see a technical reason to not get into the trade. If I just got, straight red candles going all the way down, then I'm going to avoid it. Now, ultimately, I trust my supply and demand zones, but I trust but verify. That's why I want to see the engulfing candles. So, yeah, I mean, it would be real easy for me just to set this up as a limit order. But I just want to watch. I want to make sure I get some type of a break coming out of it. So we obviously had the gap down. The more conservative approach to this would obviously be to, just trade the breakout of Friday's closing price, right? So there's really 1,001 ways to get into a trade, and it just kind of differs based off of the situation. I mean, yeah, like obviously, yeah, we had a really nice candle with a wick underneath it, right? Upon the open, but it's also the open, and we all know that, because you trade the orb, right? There's often a lot of noise when the market. So I just want to be aware of that. I typically don't get into Sunday trades. Sunday for me here in the States. Oftentimes, a lot of times I don't really get into Monday trades. My favorite day to open a longer term position is Tuesday. But that's just because I like to see 24 hours of price action, to open the week, to start the week, so that on Tuesday I've got an established trend, and then I can hop on it for the week and then close it out by Friday, max. As far as the higher time frames, the 4-hour supply and demand zones, daily, 4-hour, 1 hour, just depending on which one looks the best. But yeah, I mean, we had that initial opening on oil here, so it's not really doing a whole lot since. So I'm not in a hurry to get into this trade, but yeah, if we can get that break up though from Friday's close, for me personally, yeah, I'm absolutely going to hop aboard, because it's already collected some unfilled orders. We've had a pretty good volume spike once it dropped down on a 5-minute time frame. There's a 1 minute. Okay, that's a lot of volume when you relate it to the previous periods, which was obviously Friday's close. Right, it's a lot of volume. So good that it dropped in. Good that it gave me a wick on a 1 minute, on a 5 minute. But I just want to see a little bit of momentum, since it is the weekly open. I personally just want to see a little bit of momentum and make sure it opens, or make sure it starts to get that push above Friday's close. And then there's a couple options here, right? Now, obviously, I can put my stop loss down here. I could put it here. Some people will even put it underneath the candle itself, right? So this is just all about your risk tolerance, basically, right? Like, that wouldn't be a bad spot either. I mean, this is going to obviously dramatically increase your reward to risk ratio, but just means there's a little more risk, right? Just means there's a little more risk. Price could very easily come down further into the demand zone, find some more unfilled orders, some liquidity, and then stop you out, and then it goes in your direction, right? So, yeah, for me personally, though, I'm just going to kind of keep it under the I'm just going to play it conservative on oil, because I'll be honest, oil is actually one of my newer assets. I haven't really done a whole lot of oil trades. I mean, I pay attention to inventories that comes out every Wednesday and all that, but yeah, I'll be honest, guys, I'm still kind of learning oil. And it's kind of the problem child. We joke about it, Coach Michael and Coach Richard and I. It's the problem child. It's the redheaded stepchild, we call it.
Yeah.
Because the setup, I don't know what it is. My trading style, Coach Michael's trading style, it's just tough to get in. It's tough to get it to set up for oil for whatever reason. So. Yeah, I'm not in a hurry to get into this, but yeah, in fact, what I'm going to do, Alex, I'm actually going to set an alert once it starts to come out of the higher time frame demand zone. That's actually what I'm going to do. Once it comes out of there, as long as I see some decent volume, well, I'm gonna go ahead and hop in it. Here, but it could very easily just, it very easily could just go down, right?
Keep on
if
trucking.
It does, it negates the trade, and I haven't lost any money. So, yeah, that's pretty much where I sat at the moment.
Easy. All right. Well, I don't mind hopping onto my charts just for a little bit, Tiger, to finish us out here, back end, if you don't mind swapping them over. Cool. I think Tiger talked about a few things. Let me just get this off my screen. Tiger talked about a few things that I absolutely love especially that risk management and with your stop loss, just to give I guess, more of an educational aspect on it through there. I mean, when you are looking at your, I guess, your risk to reward ratio, so your R&R, obviously it just depends on your win rate. Because if you're doing something like this, and I would have the same stop loss as Tiger, for example. If I was to hop in here, I wouldn't just put it really close. I like to give it a little bit more room, whether that's finding the last low, making sure that, I'm underneath any FVG gaps or any liquidity in there. I'm just putting it in a section where I don't think there's any reason for the market to come down. And if it does want to come down, I was always going to be wrong. There are no if, buts, or maybes. If it's going to come and break down here, for example, and this is just a complete example, and it's going to hit my stop loss, psychologically, I can sit there and go, that's absolutely fine. Because you've got to be thinking about that when you do it. It's all well and good putting it here and going, yes, I've got a tiny stop loss. I've turned my one, or whatever this is going to be, a 0.51 into a 1 to 2.5, amazing. I'm going to make so much money. Yeah, great. But if you're consistently then taking losses and losses and losses, and with smaller stop losses, I usually do find that, well, your win rate is going to be smaller. It's whether you can take those back-to-back losses. These are things that a lot of people don't talk about and you don't think. Yes, I want to see the money. Yes, I want to do all of this, but is your win rate there? And are you actually able to handle all those losses? For example, Tiger has like 40% win rate. Now, he's got a lot of experience. He's happy with that. He goes for really good risk to reward ratio. But, that's a lot of experience behind it, especially if you're starting out. You need to figure out what's a good point for you. To be able to handle losing 2, 3, 4, 5 times. I mean, with me in scalping, it's sometimes, that'll happen within the space of an hour. Before I had my rule to be like, hey, no, as soon as I take 3 losses, I'm out of there. Like, I'm done, because I can't handle it. So it's always a good thing to think about if you guys are creating a strategy or you're following along, what am I comfortable with? What is my win rate going to be? And then with that, you can also figure out, oh, well, yeah, I'm happy to have a lower win rate and have this high risk to reward ratio because I can handle that. Or if you're like me, or maybe more like Tiger through here and going, I like the idea that, I'm beneath the liquidity. If it comes down here, that's going to suck or whatever it is. But, there's really no other reason for it to come down here. And I did everything that I can. I put it in the safest place possible. That's it at the end of the day. Nothing else could happen. I can walk away from that trade and I can sit there and go, yeah, that was fine. But I don't handle it well if it comes down, does something like this, and then decides to shoot up. That's always going to happen. You're always going to get those trades. But again, if it's here and it does it, I just go, oh, that sucks. But, I can go back into my psychology and say to myself, no, it's okay. You did put that in a safe spot. Everything's all right. It's just the market. It's going to get you every so often. But if you're just putting it in no man's land because of your risk to reward, then I'd seriously consider, how you're able to handle that trade, because it's such a massive part of trading. So hopefully for you guys there, just more of, I guess, an educational lesson and looking at the markets, but it's something that I learned way too late. I wish someone had told me this years before I figured it out and went, oh, it's not just about how much money I can make. It's about all the psychology behind it. How many wins I can take on before I start going crazy and I start putting too much money on. How many losses I can take in a row before I probably do the same thing, or I revenge trade, or I have FOMO, or whatever it is. There's always these thresholds that you got to find in the market. And honestly, where you put your stop loss will play directly into that. It's such an important thing. And I think we were talking about this last week, and again, Coach Tiger talking about it. One of the first things that I'm doing is figuring out where my stop loss goes. Where's the safest place for my stop loss? And then going into a trade. I mean, I think since I've been going live, there have been 2 scalping trades that meet my criteria, but my stop loss is way too big. Now, I didn't move my stop loss and say, hey, I'm going to make that smaller. because of that psychology and everything behind it. And my stop loss is definitely probably one of the most, if not the most important things when I'm going on my trade, because that's where we're saying, hey, my risk is involved in this area here, and I'm defining it now. This is what I can take as my risk. And if I'm not putting that in a good position, or I haven't accepted this risk through here, I'm essentially saying, well, I haven't taken on board every aspect about this trade. And if I haven't done that, how successful am I going to be? Am I going to be moving my stop losses? Am I going to be checking on it every 5 minutes? Or if I do this, and I accept my risk, and I accept my risk-reward ratio, then I can let the trade go and I can let it breathe, and I can say, hey, this is all good through here. So, longer question, but it was just really good with what obviously you were talking about, Coach Tiger, and last week as well, with stop losses. Massively important. So for those of you watching, I highly suggest when you go and you back test, or you are just hopping into trades, or you are following it along, make sure you accept that risk. That's really all I'd say. Do you have anything to add on to that, Tiger, or is that?
Yeah, I mean, no, you laid it out beautifully. I mean, we can teach and coach a lot of things in trading, but the one thing we cannot teach you guys is your risk tolerance, because that's just something that you have to figure out on your own, right? Are you okay with, like me, I lose 60% of the time. I'm okay with it because the 40% are giving me higher pip value, right? A lot of pips. Or do you prefer to win a lot, but win just a little bit at a time, like Alex? He's got about an 80% win rate. So he's doubled me up, right? But he's going for those smaller amounts of pips. So
yes,
it's going to be different for everybody. So the best thing to do is just kind of jump in, try a few different time frames, regardless of what your trading strategy is, and you'll figure out your tolerance. But yeah, I mean, that's the thing. Like when I go into a trade, and I'm sure Alex is the same, the first thing we think of is not how much money can we win. The first thing we think about is how much will I lose if and when I lose, right? Especially for me, I have a 60% loss rate. So that's always my first question in my head. How much am I willing to lose on this trade? Right? It's completely backwards from where most people, from what a lot of people will tell you, but how much am I prepared to lose on this trade? So I think if you figure that part out and you get used to that, then the wins are going to take care of themselves, right? So long as you have a decent risk reward management. But always ask yourself that question, because I don't think enough people do that. They're so focused on how much can I win. And then when they have a few losses in a row because they're over leveraged, they blow their account and they wonder what the hell happened. So, yeah, I mean, I don't know if my way is the right way or the wrong way, but I think it should be one of the first things you ask yourself. Am I okay losing 1% of my account? Am I okay losing 0.5% of my account? Am I okay losing 5% of my account on this trade? Don't ever do that. You don't want to do that. Stick to 2% or less, right?
Yes.
1 to 2% is probably ideal. I'm very ultra conservative, and I typically just risk 0.5% of my account, right? I'm not in a hurry. I'm not trying to get rich overnight. I just want to just increase it a little bit at a time. The penny doubled every day, right? The compound growth is really where the wealth comes in. It's not on one trade or two trades. Yeah, you just get used to that 1 or 2% per month, right? Something very basic like that, and you'll start to see the compound effect taking over. The compounding of your money, right? So, but that's just the way I see it. Everybody's going to have their own thoughts on that, but I feel like that's a very conservative way to look at it. I know we're about out of time, but yeah, I did a meeting with somebody the other day, and they asked me, "Hey, is 10 to 15% growth monthly, is that a good thing?" I said, "Well, it's possible, but it's not sustainable."
Absolutely,
right? It's not sustainable. You just got to start off slow, let it do its thing. But man, Alex, that was a fast hour, brother.
Yeah, it was. Oh wow, that breezed through.
Holy, I know, but yeah. Well, having said that, ladies and gentlemen, Quiet Markets will be on in 2 hours and 15 minutes. So yeah, just check in with them, and they'll give you some more info on what to look at for the week. But as always, Be
Yeah, I'll
safe.
be there.
Use your stop losses.
Yeah,
Alex, it was a pleasure.
easy. See you soon.
All right, boss. Take care.
You too, mate. You too.
All righty.
Well.
Hola Prime. Trade with transparency.